Okay, hello and welcome to another article video. I hope you guys are all doing well, and I hope you're liking these videos. I've written an article on every possible thing I could think of about trading and how we can solve, overcome and do things with time and price correlation. If you're new to my YouTube channel, welcome. My name is Meydan. I'm a finance professional and the founder of a fintech company as well for financial markets that preemptively calculates the swing days, swing hours with pricing for any market or anything you want to trade. So today we're going to take a look at trading secrets, real time and price techniques for any other market. Now, if you haven't watched any of the videos before, I really recommend that you do. We use timing and pricing to correlate our trade. So we preemptively calculate the swing days in the market, the swing hours that are highly likely going to work in that day, plus we price the market as well as best we can. So if we have a correlation of a swing day, trading hour and a price, it's going to be highly likely a good trade for us. In fact, I've got something open on gold, which I actually posted here in the members area as well today. On this one, that's the one. There's news coming out. Well, news is actually out, to be honest. Let's see what the news was. All right, so this was the news. Okay, so you can't see that obviously, so I'll just move it there. All right, so this was the news for today. Let's get rid of that. This has came out obviously, and that's 3:30 my time, UTC plus 3. I live in Antalya on the south coast of Turkey, so I didn't have any hours for 3:30, but I've got hours here. As you can see, these are the vertical lines, so this kind of suited my setup, and accordingly it was good to trade. So we'll take a look at that as well. So let's get started with the article and see what it's talking about, and also let us get myself out of the way here. All right, so okay, trading secrets. There's actually no real secret. Life is a matter of time, space and motion. Okay, and this is how we use things. We use time, space and motion to find the right time and the right price. So it's like saying be at the right place at the right time. You want to be at the right price at the right time. So knowing the highly likely swing days in advance, and when I say in advance, I mean like way in advance. As you can see, I've got the full month of June here, which was posted on the 21st of May. Okay, and I'm going to post around the same time, the 20th of May, 21st of May. I'm going to on June 21st of June, 20th of June, around there. I'm going to post the full month of July as well. I've already started working on it. So it's no real secret. Basically what we're doing is we want to preemptively know, calculate, anticipate when the market's going to turn, not just in terms of a swing day, but also as a swing trading hour as well. And if we can highly likely calculate these things with a pricing model, we should have a low risk, high return trade opportunity. Okay, so time and price calculated together. So let's make this a little bigger. Okay. Now, a lot of the times people say markets are chaotic and you never know what's going to happen, when it's going to happen. Well, at the end of the day, it's true. But we can, with high level of confidence and probability, calculate at least some of the swing days and some of the swing hours. And when it matches our technical pricing, that gives us a higher percentage of success. Now, understanding the swing days and the trading hours don't necessarily give us a direction, but when it matches our pricing model, then it gives us a highly likely trade. So what we really want to do is work on calculating these cycles and then match them to a pricing or to our technical analysis. Whatever you're using as a technical analysis, it's all good as long as you match the swing day to your technical analysis and then the trading hour to your intraday entry model, and your stop loss and exit as well. Then that should work out just fine. So the whole idea here is to anticipate the move before it happens. Now, if I anticipate the move, I've got a few advantages here, as you can see, right? Once I anticipate the move, what happens is, let's make this something we can see. I can trade with less stress, okay? Because I understand if a time and price come together, that's when I'm going to trade. So I don't have to jump in any time, every time the technical analysis is there, but I want to use time with technical analysis. This will allow me to avoid false signals and over trading because I'm looking for time and price correlation. So, you know, logical. We don't have to go in constantly trade, and we're not going to be over trading. Execute high conviction trades in any asset class. So no matter what you're trading, for example, here I've got gold. Okay, so the only reason I'm trading this today is because it's a swing day. All right, so I know according to my calculation gold has a swing day Tuesday, and today is Tuesday, right? So what I want to do is get in at a decent price, okay, and push up. Now I tried to get in once here and just got stopped out with a tight stop loss because my stop losses are really tight. I don't risk a lot. The second trade is what I posted here as well before the news. Okay, and before the news I said I'm going into that because it matched my setup. It was at a 37.5% retracement. I had trading hours, as you can see here, they're still on the screen here. These are trading hours. All right, so if the market is down, I'm expecting the market to be volatile. If it's going to go in my direction, I should be honky-dory because the swing day is at a low. Okay, so the market came down. It's my swing day on a push up, and I'm bullish on gold. So once I identify my bias, I know what I want to do. Waiting for the hours is okay. In fact, I also posted in the members area and said to the guys there, listen guys, you don't have to rush the trade because I entered the position before the news. All right, so this was like before the news happened. As you can see, it was about 3 o'clock, I guess. And basically that's it. You know, the market came down, we still had time. I said you can wait for these hours and go with a U-turn because it's either going to go up or we're going to break it down. So if it's going to go up, you can wait for a U-turn and follow through. But for me, it was a good setup after the impulse coming back down. It's a swing day and the pricing was right as well. This is the closing price of the previous day of Monday, which was suiting me for my entry and my setup. So once you got those things, your entry and so on, you can get in. All right, and if these hours work to go in as a U-turn, I can also add a position on the smaller time frame. So understanding the trading hour and the swing days in advance give me a higher conviction. Now, time price techniques you can use in any market. So this is whatever you're trading, it doesn't matter. I'm only looking at 5 assets because it's a bit of a calculation process. So I've got gold, euro, dollar, Bitcoin, and the US indices, and these are the swing days, and these are all the swing hours, as you can see, for every day. We're on Tuesday, so Wednesday, Thursday, Friday, they're not done yet, but the hours are still there. In fact, the hours for the full month of June are there, like I said. So basically, we want to calculate the time cycle. We want to know what swing days are going to happen. Okay, so then we want to match the swing day and the swing hours into our forecasting. We want to do price projection zones. Now you could do this with any technical analysis that you're happy to do. Okay, you don't have to do what I'm doing. At the Global Trader Club, I use like 5-6 technical analysis methods because one type of technical analysis does not work all the time. But if you learn to look at the market from a few different perspectives, and if you match it to time, swing day, then it's like, wow, that's a really high probability trade. And then you got multi-market compatibility. So you can basically do this for anything you want to trade. Indices, commodities, cryptocurrency, and so on. All right. Okay, now because we're a fintech, okay, so what I'm trying to do is put this into a software as a service kind of a setup. Hopefully we'll get that done soon. As you can see, what you can do is gain predictive clarity. Instead of chasing the market, you are prepared for the market, and preparation is really the best thing because your trading becomes very boring, and that's exactly how we like it. It's boring, low risk, and when we take profit, it's like 1 to 6, 7. In fact, on this trade, I'm like wanting to push it into 3,450, because if that is a swing day and I don't have any other swing days for gold, then we should probably go, if I'm right, in that direction. And if we get to 3,450, my risk return is going to be 1 to 13, okay, over 1.13 actually. So risk of 150 going into 2,000 bucks. So that's the kind of thing. And like I said, the trade is already covered. So this is a free trade because I opened 2 positions when trading. Okay, you'll trade less, but higher quality and better risk return. And you'll see your turning points before they hit the charts. Knowing really when the market's going to turn or break out is magic. This really is probably the best way to trade. Just, you know, takes all the guesswork out. And if you're wrong, okay, and sometimes I am wrong, like I got, you know, today as well, like entering here, the market got stopped out because my stop loss like was under this bar, very tight, and that's fine as long as I have small losses. But if my winnings go in my direction, they're huge, and highly likely I get my trades covered, then I'm not under stress in any way at all. Okay, so we'll be able to trade proactively and not reactively while watching the news. I mean, just think about it. The whole market is waiting for the news, right? Everybody's waiting to see what's going to happen with the news. And we, on the other hand, is like, well, you know, when the news comes out, my trading hours are here, and only 2 things can happen within these trading hours, okay, which are, let's take a look at them. Today's Tuesday, right? Between 4 and 4:15, so it's not a big deal. And then I've got here 5:30 to 6:05. So these are the trading hours that I really need to look out for. But this 4 to 4:15 is tricky, and you're going to need to keep an eye on it, and this is why I said an additional note, right? So got to be careful on that one. And 5:30 to 6:05, as you can see, it's just 35 minutes basically. It's a 2 times 15-minute bar on your trading chart to see if the market's going to turn around. And by looking at these hours, this is just 15 minutes, as you can see, like, so it's pretty precise, and that's just half an hour. By also knowing those hours, okay, then you can basically look ahead. So I've got 5:30 here as well. This is a 5-minute chart, as you can see, because I'm following it. So 5:30 to 6:05, right? So I can do this 6:05, okay? And that way I'm just looking at these hours. So we're either going to turn or we're going to break down. If we break down, I don't have a big loss. If we keep pushing up, I've got a 1 to 13 as far as we can see. Even if I take profit on the daily pivot, I'm still going to be, let's see what happens there. If I put it there and take profit here, as you can see, that's already 650 bucks. So that's already pretty much 1 to 4. All right, okay, but I would like to see gold here, and the reason I'm pushing that target up as best I can is because I know that I don't have any other swing day for gold this week, which means that if Tuesday holds, we should be going probably all the way into Friday, okay? And if I wanted to know which day, which swing, what's going to be a swing day next week, all right, then I'd be taking a look at this one here. You see, 23 to the 27th of June, and this week is going to end on the 20th of June. So I just go into there and check it out. So that's, yeah, knowing all that in advance is, I think, pretty awesome. So you get good results with confidence. You know when you're going to get in, when to act. If you're also a portfolio manager, this is also great, because you're going to be probably trading at price levels where the market, you know, comes back to a cheaper price. And then what you can do is see if that's a swing day. If it is, then you can go in with bigger confidence, less risk as well. So institutional traders can also have a really good edge by knowing the swing days in advance. So basically, in conclusion, what the way we like to trade is by knowing the swing days, the swing hours, and the pricing in advance, so we can take a look at the market and say, you know what, it's a swing day, I want to get in. The gold is low, or whatever you're trading, you can say it's low, it's a swing day, my bias is to the upside, so I'm getting in. Okay, and then you just need to match it to your technical analysis style and pricing. As you can see, it's not a real secret, it's just maths correlating it with timing and pricing, and that's basically it. If you have any queries, questions, feel free to drop me a line. Hope you're gonna have a good day and a good week trading, and I'll see you guys on the next video.